Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. XRP ETF approval odds hit 81% on Polymarket. Is 2025 the year for XRP's breakthrough? Crypto firms move to El Salvador, but will US banks ease the path to success? SEC Crypto Task Force engages with industry leaders to shape staking and ETP regulations. US states push for crypto legislation, from Bitcoin reserves to task forces. Altcoin season delayed amid speculation and declining retail activity. What's next for the market? XRP ETF approval odds hit 81% on Polymarket. Is 2025 the year for XRP's breakthrough? Optimism around an XRP exchange-traded fund, ETF, is surging, with Polymarket odds projecting an 81% chance of approval in 2025 following the SEC's acknowledgement of Grayscale's ETF application. XRP surges on ETF optimism and real-world asset launch. XRP rallied over 10% in 2 days, breaking past the $2.50 resistance and reaching $2.78 on February 14. The surge came on the heels of positive ETF news and real-world asset (RWA) integration on the XRP ledger. SEC acknowledges Grayscale's XRP and Doge ETF applications. The U.S. Securities and Exchange Commission, SEC, acknowledged Grayscale's filing to list XRP and Dogecoin ETFs on February 13. Under Section 19(b)(2) of the Securities Exchange Act, the SEC has 240 days to approve or deny the ETFs, though analysts speculate a faster timeline under the pro-crypto administration. Polymarket odds surged to 81% for 2025 XRP ETF approval. Following the SEC's acknowledgement, Polymarket odds for a 2025 XRP ETF approval jumped from 70% in January to 81%. Betting sentiment remains divided for an earlier approval, with only 45% forecasting success before Q3 2025. Experts weigh in on approval timeline. Despite the optimism, Bloomberg analyst James Seifert believes an XRP ETF will likely hinge on the outcome of the SEC's lawsuit against Ripple Labs. Jeremy Hogan, partner at Hogan & Hogan and a prominent XRP advocate, cautioned that approval could be delayed due to regulatory reviews of Form S-1 filings, which detail investment strategies, risks, and operational disclosures for crypto-based ETFs. Will XRP's bullish momentum continue if the SEC grants ETF approval in 2025? Crypto firms move to El Salvador, but will US banks ease the path to success? El Salvador, aiming to be Latin America's crypto hub, faces a major hurdle: access to traditional banking services. Despite the country's pro-Bitcoin policies, many crypto firms struggle with banking barriers due to US banks' cautious stance and regulatory uncertainty. US banks' reluctance hinders El Salvador's crypto aspirations. Eloisa Cardenas, Chief Innovation Officer at Monety, highlights the issue. Even fully regulated companies in El Salvador are denied local bank accounts due to US banks' concerns about regulatory scrutiny. Despite El Salvador adopting Bitcoin as legal tender in 2021 and steadily adding BTC to national reserves, banking challenges persist. Hope for change under a pro-crypto US administration. Crypto leaders are optimistic that a potential return of President Donald Trump, known for his pro-crypto policies, could shift US banking attitudes. Faria Sherzad, Coinbase chief policy officer, recently called on U.S. regulators to stop blocking banks from offering crypto services, emphasizing the need for clear guidance. Traditional banks signal openness to crypto. Signs of change are emerging. At the World Economic Forum, Morgan Stanley CEO Ted Pick expressed willingness to collaborate with U.S. regulators on crypto services. Bank of America CEO Brian Moynihan added that if regulations become clear, the banking industry would embrace crypto services. IMF and U.S. policy shifts fuel optimism. The IMF, once critical of El Salvador's Bitcoin experiment, has acknowledged that many feared risks have not materialized. Meanwhile, recent reports from Elliptic Global Policy Group suggest that Trump's executive order on digital assets could encourage U.S. banks to provide better access to financial services for crypto firms. Will U.S. banks shift unlock El Salvador's potential as a global crypto hub? SEC Crypto Task Force engages with industry leaders to shape staking and ETP regulations. The U.S. Securities and Exchange Commission's SEC Crypto Task Force recently met with key players from the crypto and traditional finance sectors to discuss staking, exchange-traded products, ETPs, and regulatory frameworks for digital assets. Industry proposals for clearer crypto regulations. On February 4, the Blockchain Association presented 6 key recommendations to the SEC, urging pro-innovation policies for custodians, exchanges, and broker-dealers. The group also called for consistent ETP standards and a review of past legal interpretations under previous SEC leadership. Focus on staking in ETPs. On February 5, Jito Labs and Multicoin Capital met with the task force, advocating for staking integration in ETPs. They suggested that staking reflects the core utility of proof-of-stake tokens. Notably, the SEC may reconsider its previous ban on staking rewards in Ether ETPs, with the possibility of expanding this policy to Solana-based ETPs. Discussions with Nasdaq and capital firms. Nasdaq representatives pushed for a unified approach to digital asset trading, proposing that non-securities digital assets and securities be traded on the same platforms to ensure consistent rules. Meanwhile, Andreessen Horowitz's Capital Management focused on token classification and market intermediary regulations. Sullivan and Cromwell's Legal Insights. On February 7, Sullivan and Cromwell's Colin D. Lloyd discussed blockchain technology's intersection with securities law, emphasizing clarity for blockchain-based securities and bankruptcy proceedings. Policy shift under new leadership. With President Trump in office and pro-crypto SEC Commissioner Hester Peirce leading the task force, expectations for regulatory reform are rising. Peirce, known for her criticism of past enforcement-heavy approaches, is determined to reshape the SEC's digital asset policies. Will the SEC's new pro-crypto direction finally deliver regulatory clarity for staking and digital asset ETPs? U.S. states push for crypto legislation, from Bitcoin reserves to task forces. The momentum for crypto legislation is surging across the United States, with 9 states introducing cryptocurrency-related bills in February alone. From Bitcoin reserves to task forces, state lawmakers are shaping policies that could redefine the nation's digital asset landscape. North Carolina proposes investment in crypto ETPs. On February 10, North Carolina introduced the Digital Assets Investments Act, allowing the state treasurer to invest public funds in digital assets via exchange-traded products, ETPs. The proposed bill, which limits crypto investment to 10% of state funds, aims to position North Carolina as a leader in technological innovation, aligning with President Donald Trump's pro-crypto vision. Michigan moves to establish a crypto reserve. Michigan lawmakers proposed creating a state crypto reserve on February 13, making Michigan the 20th state to introduce such legislation. The bill permits the state treasurer to allocate up to 10% of funds into crypto or ETPs and allows lending of crypto assets for additional returns. Representative Brian Posthumus, who championed the bill, also floated the concept of a state-backed stablecoin, MeCoin. New York proposes a crypto task force. New York legislators introduced a bill to establish a 17-member crypto task force to study the state's digital asset landscape. The group will examine energy consumption from Bitcoin mining and compare New York's regulatory framework with other states. Mayor Eric Adams has urged reforms to New York's restrictive BitLicense regime, which has driven crypto firms elsewhere. Texas expands its Bitcoin reserve bill. Texas, a hub for crypto innovation, revised its Bitcoin reserve bill on February 12 to include other cryptocurrencies with a market cap above $500 billion. The update also removed a $500 million funding cap, allowing the state to hold unlimited Bitcoin reserves. Senator Charles Schwertner expressed optimism that the bill, now among the Senate's top 40 priorities, will pass. Can these state-level crypto bills shape the future of digital asset regulation nationwide? Altcoin season delayed amid speculation and declining retail activity. What's next for the market? Crypto analysts suggest the altcoin market remains in an early speculative phase, awaiting a surge in retail participation before rallying to 2021 highs. Despite select altcoins posting gains, declining wallet activity indicates limited retail engagement and a delayed altcoin season. Retail activity declines despite price gains. On February 10, Algorand, ALGO, traded at 28 cents with only 182,170 daily active wallets, a sharp drop from the 1.31 million wallets during its 2021 all-time high of $1.46. Similarly, Chainlink, Link, saw daily active addresses fall to 3,860 on February 10 from 11,280 on May 3, 2021, despite Link reaching $19.48. Memecoins outshine altcoins in retail speculation. Nikolai Sondergaard from Nansen notes that memecoins are capturing retail attention, diverting capital from altcoins. A recent example is a trader profiting $28 million from broccoli memecoins, though insider trading concerns surfaced. Experts highlight the speculative phase. Redstone COO Marcin Kosmichak attributes the current rally without address growth to an early speculative phase. He notes that daily active addresses remain far below 2021 peaks, signaling that widespread retail adoption has yet to occur. Altcoin market capitalization remains depressed. Altcoins excluding the top 10 cryptocurrencies hold a market capitalization of $277 billion, 77% below the $492 billion peak from November 2021, according to TradingView. Will altcoin season arrive once retail traders return, or are memecoins redefining this cycle's market trends?